Welcome to the channel. Today we will discuss the economy of Vietnam in 2026. Vietnam stands at a pivotal juncture in its economic development as it enters 2026. The Southeast Asian nation is embarking on what many economists describe as the most ambitious policy cycle in its history, targeting double-digit GDP growth as it works to transition from a lower middle-income country to upper middle-income status, and eventually to a high-income economy by 2045. The Vietnamese government has set a GDP growth target of 10% for 2026, marking the first year of the country's 2026-2030 Socio-Economic Development Plan. This ambitious target represents a significant acceleration from the impressive 8% growth achieved in 2025, when the economy demonstrated remarkable resilience despite global headwinds including trade tensions and geopolitical uncertainties. Economic forecasters have largely embraced this optimistic outlook. VnDirect forecasts Vietnam's GDP growth under the base case scenario at 8.8%, while Dr. Can Van Luc, chief economist at BIDV, forecasts growth will reach 9 to 10%. These projections are underpinned by deeper structural reforms, strong public investment, and a strategic shift towards more sustainable, higher-quality growth. The economic momentum carried over from 2025 provides a solid foundation. Vietnam's GDP expanded 8.46% in the October-December 2025 period, beating analyst estimates, driven by robust manufacturing, investment, and trade activity despite external pressures. Public investment has emerged as the cornerstone of Vietnam's 2026 growth strategy. Public investment capital in 2026 is expected to rise by 10.3% compared to 2025, reaching nearly 8% of GDP, one of the highest levels in recent years, and the highest public investment to GDP ratio in Asia. Successful public investment disbursement could contribute up to 2 percentage points to GDP growth. State budget development expenditure is projected to rise by approximately 29% from the estimated 2025 level, with capital allocation concentrated on large-scale, nationally strategic projects. These investments focus on infrastructure, energy, and logistics, critical sectors that will enhance Vietnam's competitiveness and support long-term sustainable expansion. The government has enhanced its policy flexibility through recent legislative approval, allowing it to amend relevant laws and resolutions to facilitate mechanisms that mobilize private capital into strategic infrastructure. This institutional agility represents a departure from previous approaches and signals Vietnam's commitment to removing bottlenecks that have historically constrained development. Domestic consumption is the biggest unknown factor for Vietnam's economic growth in 2026, yet it also represents the greatest opportunity. Domestic consumption currently accounts for 60% of growth and is emerging as the most critical driver of Vietnam's economic momentum. Several positive signals suggest consumption is poised for recovery. The labor market has shown improvement, with employment in industrial zones recovering and informal service jobs rebounding alongside the tourism sector. Household incomes have grown at an annual pace of around 6 to 7% over the past 2 years, while both the stock market and real estate prices rose by more than 30% in 2025, providing a stronger foundation for consumer spending. Vietnam's manufacturing sector continues to demonstrate impressive strength, solidifying the country's position as a rising manufacturing hub in Asia. In 2025, Vietnam's GDP rose 8.02%, mainly due to a 9.97% increase in the processing industry, highlighting the sector's critical importance to overall economic performance. The country has successfully diversified its export portfolio while climbing the value chain. According to MB Securities' Vietnam Outlook 2026 report, Vietnam's exports may grow by 15 to 16% in 2026, driven by market expansion and a shift towards higher value products. The government's official target is more conservative, aiming for 8% export growth in 2026, equivalent to a turnover of around $513 billion. Electronics, computers, and components remain Vietnam's largest export category. Electronics exports reached nearly $108 billion in 2025, accounting for 23% of total exports and rising 48% year-on-year. Major global technology companies like Samsung, Apple, and LG have established significant manufacturing operations in Vietnam, with Samsung alone employing over 200,000 workers in the Hanoi area. Traditional sectors are also showing renewed vitality. The textile and garment sector, which earned $46 billion in 2025, aims for $50 billion in 2026. Agriculture continues to surprise on the upside, with coffee exports hitting a record $9 billion in 2025, up 59% year-on-year, while fruit and vegetable exports are projected to reach between $9.5 and $10 billion in 2026. Vietnam's economic transformation in 2026 is distinguished by comprehensive institutional reforms rather than piecemeal adjustments. A series of strategic party resolutions have been issued with a new approach, one that does not remove individual bottlenecks in isolation, but seeks to reshape the overall landscape. Two landmark resolutions stand out: Resolution 68 on private sector development and Resolution 57 on science, technology, innovation, and digital transformation. These policies signal a fundamental shift in Vietnam's economic philosophy, empowering the private sector to play a more central role in economic expansion while maintaining the state sector's strategic leadership. The launch of the International Financial Center Initiative highlights Vietnam's ambition to become a regional financial hub, while the National Semiconductor Industry Development Strategy positions the country as a potential key player in the global chip ecosystem. These initiatives are interconnected, driving Vietnam's shift toward high-value industries, digital transformation, and inclusive growth. Despite its strong domestic fundamentals, Vietnam faces significant external headwinds in 2026. Mounting external pressures include stricter technical barriers, reciprocal tariffs on goods exported to the U.S., and the European Union's carbon border adjustment mechanism for selected industrial products. However, Vietnam has demonstrated remarkable adaptability. The country has leveraged its strategic neutrality and diversified trade relationships to mitigate risks. Vietnam has signed 17 FTAs, which help businesses access the global market more easily, including the EU-Vietnam Free Trade Agreement, which has helped position Vietnam as the EU's top trading partner in ASEAN. Trade diversification has accelerated beyond traditional reliance on the United States market. In 2024, trade with the EU grew by 36% compared to 2019, demonstrating Vietnam's success in expanding market access. The country is also targeting emerging opportunities in the halal market, estimated at over $2 trillion globally, recognizing that market diversification will be essential for sustainable export growth. Vietnam's GDP is projected to hit $510 billion in 2025, while average per capita income is expected to exceed $5,000 for the first time, a pivotal milestone in the country's transition to a high middle-income economy. For 2026, the government targets per capita income of $5,400 to $5,500. This transition represents more than just numerical targets. It reflects Vietnam's evolution from a primarily labor-intensive, cost-competitive manufacturing base to a dynamic, innovation-driven economy capable of producing high-value goods and services. The country's workforce is becoming more skilled, enabling Vietnam to manufacture electronics and advanced products that now comprise a significant portion of exports, compared to the crude oil and agricultural products that dominated in previous decades. The greatest challenge ahead lies in execution capacity. While Vietnam has crafted ambitious policies and set bold targets, translating these plans into reality requires sustained effort, coordination across government agencies, and private sector engagement. Experts emphasize that Vietnam's double-digit growth target is achievable but far from guaranteed. Timely and targeted disbursement, particularly in infrastructure, energy, and logistics, remains critical to sustaining elevated and durable growth. The government must maintain momentum on institutional reforms, ensure efficient capital allocation, and foster an environment that encourages both domestic and foreign investment. Vietnam enters 2026 with extraordinary ambition and substantial momentum. The convergence of favorable domestic reforms, strategic international positioning, and strong economic fundamentals creates conditions for transformative growth. The 10% GDP target, while challenging, reflects a carefully considered assessment of Vietnam's potential rather than mere optimism. Success will require Vietnam to maintain its reform trajectory, execute public investment efficiently, stimulate domestic consumption, and navigate global trade complexities with continued agility. If the country can translate its ambitious plans into concrete results, 2026 could mark the beginning of a new era, one that establishes Vietnam not merely as a regional manufacturing hub, but as an increasingly sophisticated, innovation-driven economy poised to join the ranks of upper-middle-income nations and beyond. The world will be watching closely as this dynamic Southeast Asian economy embarks on perhaps its most consequential year of economic development. Thank you for watching.